Welcome back to WealthWave USA, your trusted source for smart investing and long-term wealth strategies. Today, I'm breaking down 5 high-potential stocks with significant long-term upside. These aren't hype stocks or short-term plays. They're carefully chosen opportunities in AI, automation, next-gen computing, and U.S. strategic materials. I personally own all 5 of these companies, and I'll be upfront about my holdings, why I believe in them, and whether I'm adding more at current prices. Before we get started, a quick reminder. This is not financial advice. Always do your own research and invest responsibly. Stock number 1, USA Rare Earths, ticker USA. I hold 400 shares worth about $12,112. USA Rare Earths is building a US-based supply chain for rare earth materials, which are essential for electric vehicles, aerospace, defense technology, and AI hardware. With global supply chain risks, this company is strategically positioned for the U.S. market. They're gearing up to start production at their Texas facility, with revenue projected to jump from $46 in 2026 to $183 in 2027, and over 60% annual growth projected after that. Analysts are starting to pay attention, and potential government contracts could further boost growth. For investors interested in strategic minerals and domestic manufacturing momentum, this is a stock worth watching long-term. Stock number 2, Poet Technologies, ticker Poet. I own 1,700 shares worth around $13,260. Poet is a rising player in chip-scale photonics, which merges electronics and optics to supercharge data transfer in AI data centers. Key points: debt-free with $150 in cash, partnerships with Foxconn, Sivers Semiconductor, SEC Corp. Recently raised $75 in funding from institutional investors. Although still pre-revenue, landing a major contract could trigger a significant breakout. Poet is a high-risk, high-reward opportunity for investors seeking AI infrastructure exposure. Stock number 3, UiPath, ticker PATH. I hold 1,200 shares worth about $1,900. UiPath is a leading company in robotic process automation, RPA, and enterprise AI. With $1.7 billion in annual recurring revenue and partnerships with NVIDIA, Snowflake, and OpenAI, it's a more stable AI software investment. UiPath is executing a turnaround plan, and if it reaches previous highs near 90 share, that's over 5x upside from today's price. For investors seeking growth with less risk than early-stage startups, this is a solid pick. Stock number 4, CCCX, merging into inflection. I own 1,000 shares, worth about $20,170. CCCX develops quantum computing, sensing solutions, and atomic clock tech, all critical for next-generation computing and secure communications. Unlike many quantum startups, CCCX is capital efficient, raising only $270 since 2007, while building a $300 product backlog. The upcoming inflection merger could attract institutional investors and serve as a major catalyst. For early exposure to quantum technology, this is an opportunity worth watching. Stock number 5, Resolve AI. This is my largest position, 31,800 shares, worth about $155,000. Resolve AI focuses on AI-driven commerce automation, including digital checkout systems and AI-powered customer interactions for major online retailers. They also plan to expand into crypto-enabled payments. Highlights: trading at under 3x sales, targeting $500 ARR by 2026. Insiders hold 38%, with Citadel investing $100. Projected profitability by 2026 to 27 makes this a multi-year growth story. Final thoughts: these 5 companies give you exposure to AI infrastructure and automation, quantum computing innovation, U.S. domestic resource development, enterprise AI adoption, high-growth emerging tech. Some are higher risk, but each offers significant long-term upside. Always diversify, manage your risk, and invest based on your own plan. Like. If you found this breakdown useful, leave a comment and let me know which of these stocks you'd consider adding to your portfolio. Thanks for watching. Stay smart, stay invested, and keep building wealth.